let me get this straight. Option A is that I have to pay $40,000 to $80,000 so that FEMA will come out here and do a study to establish what the water table is. But you're telling me that FEMA is backed up now somewhere between 4 to 8 months, and you're telling me that today FEMA's had all sorts of more problems, so it's probably more than that. And if FEMA says that we're not 4 feet over the water table, right, and if we're not within FEMA guidelines for the floodplain, then we're going to have to tear off both the north and the south garages from the house, and we're going to have to raise 6,000 square feet of house a foot or two. That's option A. I'm sorry, I'm going to have to go with option B. The Willow Creek project has gotten very interesting. And we have had like 6 months in a row of bad news. It all started with Hurricane Helene. I just need to make a quick acknowledgement before I go farther into this story. I promise you the story is worth it because it is both humorous and gut-wrenching and incredible and wild, and it's just an incredible story. But as hard as this story is, and as gut-wrenching as it has been to live through the aftermath of Hurricane Helene, I recognize that I've been very blessed. My family was safe, my friends were safe, our home was safe. Now we lost a ton of money. And places that I've known my entire life were destroyed beyond all reason. I grew up in a little town called Hendersonville, about 15 minutes from Asheville. One of my best friends in the world came out to visit us 2 years ago. He ended up not being able to visit us because we all got COVID. And so he took that time to go see the streets of Asheville, which he had never really seen in his adult life. He asked me the other day, hey, how's Asheville recovering from Hurricane Helene? And it was sad because I couldn't give him good news. Asheville is still destroyed because of Hurricane Helene. It is May right now of 2025. Asheville will not recover from Hurricane Helene for decades. And it's because it's not a fire that you clean up from in a small area and move on with your lives. It's not a tornado that goes for a path and you clean up from eventually and you move on from your lives. It was a mountain flood. And what that means is every single valley in the region filled with water and picked whatever it had up and moved whatever that was down the river. And when the water went away, all the crap remains. In every woodland area in western North Carolina, there's just garbage now. There's old cars and refrigerator parts and random bits of metal and random crap that got deposited by the floodwaters. In every forest I drive by, I see tree after tree after tree after tree down in every direction. Western North Carolina has not recovered from Hurricane Helene and will not recover from Hurricane Helene for decades. This story is a humorous story, and yes, we did get hurt. Yes, financially, it put us right on the edge of having to sell our own home and having to make some really hard financial decisions, but none of me and mine died. And I don't want this humorous story about the complexities of how Hurricane Helene twisted my life into kind of a knot to put any light on the people who lost much more than me, who there were many more of. If you have it in your consciousness and in your financial ability to contribute to any cause, we'll link some of the best causes below that are still working on Helene cleanup, that are still working to help this region that I love, that's full of people that I love. But please know that my losses and my challenges don't represent the losses and challenges from Hurricane Helene. Now, back to a fun story about entrepreneurship and madness. The last video we were able to put up on the Willow Creek project, the biggest rehab we have ever done, was right after Hurricane Helene. And we had a bid from our contractor to come in and do everything we talked about in that video. If you haven't seen that video, you should watch it because it's cool and it walks through every single thought we initially had on that property. So we had a bid for $1,080,000 to do it. Now, in my head, I was like, okay, 1.5 million, maybe up to 2 million. No project, no real estate rehab project I've ever done has come in on budget. Never happens. And so I was like, 1.5, maybe 2 million on the high side. We're going to be able to get it done. Maybe double the budget if everything goes crazy. But we go and we submit that to Greenville County, where the property is. And we submit that to Greenville County, and they come back to us a week later and they say, hey, just so you know, in South Carolina, if you do more than 50% of the value of the property, the structure in a rehab, everything has to be brought up to code. Now we know that because we ran into that a couple of times, but we ran into that recently on our Charleston rehab. We had to bring that one up to code because it had a fire and we bought it like $225,000 and the whole house was burned down, mostly. Like the whole house had been on fire. And so we knew that we were going to have to spend a lot of money to bring that one up to code, and it was built in the 60s, and so bringing it up to code's like a complete rewire and like a ton of stuff that we had to do with that property. And so the bottom line is we've done that before. We've had to bring houses up to code. Now this house, Willow Creek, this house is, built in the 80s. Like there's not that much that's changed in the code since the 80s. And so we said, okay, that's fine. We'll bring it up to code. And they said, well, this house is sitting in a floodplain. Now we knew that when we bought it. Of course it's sitting in a floodplain, right? It's 30 feet from two ponds, from like 50 million gallons of water, whatever the crap, however big they are, right? Of course it's sitting in floodplain. It's 50 feet, 30 feet from this big sliding rock that's a river. It's basically like a river coming down, right? And the river wraps all the way around the property. The entire south side of the property, the boundary line is the river. We know it's in a floodplain. We understand that when we bought it. And so they're like, well, you have to, the code says you got to be 4 feet over the water table. And we said, okay, well, what's the water table on this property? Like, it was built in the 80s, it's probably in good shape. And they say, we don't know. And we're like, that's new. I've never bought a piece of property where no one knew the water table, right? And so I say, well, what's the water table? We don't know. And I said, why is that? And they said, well, no one's ever done a FEMA study on this property. And so because of Hurricane Helene, everyone's now like on pins and needles around floodplains. And like, what is a floodplain? What is not a floodplain? What's code for a floodplain? And so they're saying, hey, no one's ever done a FEMA study on this property. And I said, cool, we'll go ahead and do a FEMA study. And they said, that's you have to do a FEMA study. And I said, okay, I've never done a FEMA study before. How do I get that done? And so they said, well, you go to FEMA's website and you do this and this and you jump through these hoops, you pay their fee and they come out and they do a study and they establish what's the water table. You got to be 4 feet or whatever the technical term, you got to be 4 feet over the water table. And I said, okay, well, that's fine. Let's go ahead and get that done. Just out of curiosity, how much is that roughly, so I can budget it in? And they say, well, a FEMA study right now is probably for that size property, it's like $40,000 to $80,000. I'm like, holy cow, that is quite the study. And they said the bigger problem is that FEMA is really backed up right now. And this was before the inauguration. And so they said, FEMA's really backed up right now. It's probably going to be a 4 to 8 month wait. So you pay the fee and then you got to wait 4 to 8 months before they're done. And I said, holy cow, that is insane. 4 to 8 months before we even know what the water table is. And they said, yeah, that's probably it. Now, since then, the inauguration's happened and kind of Doge stuff is happening. And so FEMA's having its problems and the California wildfires have happened. So FEMA's probably more backed up. Really, FEMA may be 12 months, 20 months out from being able to do a FEMA study for us on this property. And so in that moment, I was like, okay, wait a second. You gotta be with me. Just be with me for a second. What you're saying is my options are like two. Like there's option A, I do more than 50% of the value of the structure in a rehab. And if I do more than 50% of the value of the structure in a rehab, then I've got to bring the whole property up to code. And because it's in a floodplain and because it's never been FEMA studied, I have to pay FEMA $40,000 to $80,000. And then I've got to wait for FEMA somewhere between 4 months and 20 months, probably 4 to 8 months, to come out and do the FEMA study. And if they come out and they tell me that I'm not 4 feet over the water table or whatever that code is, then what I'm going to have to do is I'm going to have to tear the north and the south garages off of this property because they're built on a slab foundation. They're like on the ground on concrete, right? And there's something weird going on with the kitchen. Like the kitchen's on I-beams and structure in a crawl space, but it's concrete too for like, I don't know. They poured a concrete slab on top of I-beams, maybe for like commercial grade appliances. I don't know why they did that, but something's weird with the kitchen and I wonder how that's gonna lift. And then we gotta come in, and if we're not 4 feet over table, let's say we're 2 feet off, like we're 2 feet lower than we should be for the water table. Then we gotta come in and jack this whole property 5,723 square feet, right? 6,000 square feet. We got to take 6,000 square feet and lift it into the air and leave it there forever, right? Like I cannot even fathom that bill. Lifting that house, let's call it $250,000. Let's just call it $250,000, $250,000. That's option A. I'm going to have to go with option B. I'm going to have to go with option B. There's no way that makes sense for me. There's no way that waiting that long and spending that money, and that's what we've just done since we bought the house in last July, right? It's freaking March. We've been going back and forth. Well, and Hurricane Helene freaking hit in September. And so like we've been going back and forth trying to figure out exactly what was required. And so I finally like, okay, if option A is this heinousness, that like the heinousness beyond reason, and option B is I just have to spend less than 50% of the value of the structure. Well, let's do that. Let's just keep it. There's nothing legally that says that if you're going to rehab a house, you have to do it all, right? Like I can make my peace with a mediocre room, right? I can make my peace with a mediocre room. We'll do some stuff. We're bright enough. We'll figure out how to make the mediocre room good. Or great, but like I can make my peace with a mediocre room. I can make my peace with upstairs not having 4 master bedrooms. Yeah, I can already see in my head. I can get to 3 master bedrooms and a bunk room, or 2 master bedrooms and a bunk room and something else. I can make my peace with not doing more than 50% of the value of this structure in a renovation. That is not what has to happen here. What has to happen is the thing's got to get done and got to create some value and got to get on the market, got to start paying some dang bills. Right? Because I'm paying interest on this money right now. I've been paying interest on this asset since we bought it in July of last year. And Hurricane Helene just threw a bunch of weird wrenches into this and into the whole plan that we built for this client. And so the long and the short is I ask the person at the office, I say, okay, cool, we'll just keep it under 50%. What do you guys have marked down is 50%? And they say, we don't know. I'm like, no way. No way! That is still the answer. You don't know? I know for a fact I'm going to take a tax bill from you all. And on that tax bill, you're going to be like, hey, Willow Creek is worth $700,000 or something, right? Because you're going to charge me for taxes. I don't understand. You guys have a value and I have to stay within that value. So what is the value? We don't know. And I said, well, how is that even possible? Now, if you're new to the channel, it's not just real estate. It's not a workflows and automation channel. It's not an efficiency channel. This is an entrepreneurship channel. And maybe a little bit of a guided tour of the type of stuff we do and why you might like it might be helpful. If I was to start anywhere on the channel right now, I would start right here at Trump's Tariffs Explained. One of the 7 companies that I own is a bandage company. It's called Crash Pads. We import directly from China. So the day after Liberation Day, in 2025, we did a video talking specifically about all the intricacies of how Trump's tariffs affect my business, my bandage company. And what I did was I got a whiteboard out and I just walked through all of the different pieces of Trump's tariffs and how they affect a small business, from profitability to pricing a product to building a supply chain to employment and how tariffs will affect employment, to sales taxes, to who pays the tariffs. We really just talked all of it through. And if I'm honest, I think it's one of the better explanations of how tariffs affect an economy of anything I've seen or heard. And it did really, really well. And we just walked through all of the intricacies of that. If that doesn't interest you, Maybe you'd be more interested in enormous rehab. I've always loved rehabbing houses. This is the biggest rehab I've ever attempted. And I've flipped at least 15, 20 properties over the years. But this rehab cost us $1,060,000. It's going to be years of work. It's a big, gorgeous, interesting, complicated rehab. And we're letting people follow along the entire time as we rehab the whole thing. It's an incredible project. It's got it's big 6,000 foot McMansion, and it's got this beautiful sliding rock feature into rivers. It's a fascinating project. Maybe you'll enjoy that. If you enjoy building companies, you might enjoy this one right here, which we just barely released. Turo's Insurance is Not Insurance. We have 21 cars on a Turo fleet in Charleston, South Carolina. That 21 cars has to be insured. And Turo's Insurance has some fundamental deficiencies that have to be understood. You have to understand, if you're going to start a Turo fleet, what that feels like, right? If you ever wanted to understand how Turo's Insurance works, I did a 45-minute conversation on that, again, where I walked it through really intimately and helped people understand how Turo's Insurance works and how it's not really insurance. If you're interested in buying rental real estate and getting involved in real estate, our team has done over 5,000 properties in the last 15 years. Right now, we oversee the day-to-day, the LLC setup, the LLC compliance, the bookkeeping, the property manager setup, the property manager oversight, the annual reviews, when to buy, when to sell, how to find. We do all of that for hundreds of properties a month. If that interests you and you're just interested in, hey, real estate investment, how do I get there? This video, Never Buy Rentals Here, is the simplest math that I can do to help people understand what makes a good rental and what doesn't. Where are markets that make sense and where are markets that don't make sense? If that interests you, feel free to look around, but it's an entrepreneurship channel. There's a bunch of different pieces. It's a really complicated channel. It's not just real estate. It's not just efficiencies. It's not just Turo. It's not just flipping. It's not just Airbnb. It's all of those things, because I own companies right now that do every single one. And so the long and the short is, I ask the person at the office, I say, okay, cool, we'll just keep it under 50%. What do you guys have marked down is 50%? And they say, we don't know. I'm like, no way. No way. That is still the answer. You don't know? I know for a fact I'm going to take a tax bill from you all. And on that tax bill, you're going to be like, hey, Willow Creek is worth $700,000 or something, right? Because you're going to charge me for taxes. I don't understand. You guys have a value and I have to stay within that value. So what is the value? We don't know. And I say, well, how is that even possible? And they say, well, your property used to be part of another property and it was a subdivided property. And so since it was subdivided, we have to send our appraisers out and we have to get an appraisal on the property that's independent. And we'll enter that in. That's how we'll do your tax bill. But that hasn't been done yet. That's going to be done sometime in calendar year 2025. And so it hasn't been done yet. So the county doesn't know what the bill is yet. And the county doesn't have a valuation. And they're saying you have to keep this under 50% of the value of the structure, but the county doesn't have a value of the structure because they haven't done their appraisal. And so I say, okay, what do you want me to do here? Like, what do you need to do this? And they say, well, we need an appraisal. I say, well, that's weird. I don't even have an appraisal. I bought this property for cash, right? Well, me and my investor bought this property for cash because we knew it was a good deal. In all candor, in total candor, this property was probably worth $1.5 million, and it was just poorly marketed. Like, for months, I called this property real estate malpractice because it was the worst marketed property I've ever seen in my whole dang life. It was marketed terribly. And I may do a recording where we go through like the Zillow listing and to talk about like, what in the world? What was everyone thinking related to this? However, I thought it was marketed terribly. I told my investor, hey, it's marketed terribly. I think we can get a smoking deal. We have to get it off the market, right? I did not need an appraisal to know the value of this asset, right? Because I've done real estate my whole life and we've done so much real estate that I knew it was a good deal. And everyone who knew what we were doing just needed it off the market. We needed it under contract and off the market. And so we just made an offer. We made an offer, cash, we closed, it's ours, done. I never needed an appraisal to tell me what this property was worth for me to feel comfortable offering $1,060,000, okay? But the county's now saying that we do need an appraisal to establish how much is 50% of the value so that I don't have to bring everything up to code and do the FEMA study. And potentially demo a third of the property with yanking the garages off and then lifting the whole property into the sky. Like, the county is saying that I have to do things that I'm like, I've never even heard of this. I've never even heard of a property in an area where people live, where there's an elementary school near enough that hasn't ever had a FEMA study done. This hasn't occurred to me that I could be buying a property that's been occupied for like 150 years, that's always been this close to the river, and that there's no FEMA study there. Like, I'm sorry. You run into new things every day. It's entrepreneurship. I'm sorry. Like, sometimes you just run into something, you're like, well, that's new. I've never seen that. We knew that we could have to bring the property up to code, but the fact there's no FEMA study at all didn't raise red flags. When we looked at it, we're like, okay, nothing says it's not up to whatever, right? Whatever. And so we're like, okay, that's really weird. Okay, let's go get an appraisal. Okay, let's get an appraisal, and that appraisal is going to matter. Because the appraisal is effectively going to define everything. The appraisal, if I'm going to keep this, option B, if I'm going to keep this under 50% of the value of the structure, if that's what I'm shooting for, then I have to get an appraisal that gives me enough wiggle room to do that, right? And so what I need to do is I need to go get an appraisal and hope it comes in really high so that I can say, okay, the $2 million for $2 million for the property gives me $1 million to work with. I can do that. The problem is I've bought a lot of property, and I've had an appraiser look at me before and say, well, you paid $1.06 million for the property. It's worth $1.06 million. I bought the property really, really well. That was that's the whole game we're playing. Like, you make your money when you buy, and then you rehab it, and you make some more when you sell. But you make a lot of your money when you buy just by getting a good deal, right? And so I bought the property at $1.06 million. And since I bought the property, Hurricane Helene has hit and flooded the entire main floor, because it's like a 1 in a 5,000 year storm, flooded the entire main floor, which we have demoed so it didn't mold, and destroyed the retaining walls on the pond. So now there aren't ponds, there's just a bunch of rocks everywhere, and there's like a little dribble of water going through the lower pond. I've got to reconstruct some retaining walls. I've got to get the man-made island that was sitting on the rock wall out of the top pond. I've got to get the freaking covered bridge that was up on the neighbor's property out of my pond. I've probably got $100,000 to $200,000 of repair work that has to be done just to get the house back to the condition where I bought it, right? And I bought it for $1.06 million. And so I really have some concerns about this appraisal. I'm just going to be honest. I'm like, whoo, this is going to be spicy. This is not good news. And this just keeps backing up, right? Entrepreneurship is about bottlenecks. And the bottleneck just keeps moving back and back and back. And so it's like, hey, you need the permits to build. Cool, we're all there. Hey, you need the permits to build. Before you can get the permits, you need to know what your scope of work is. You need to have your architectural plans drawn up and stamped so you can submit architecture plans. Your plans have to be complete so that you can submit them to the county and so you can get your permits so you can build. Cool. Before you get your architectural plans, you have to tell your general contractor what's your scope of work. What do I want done? I want this bedroom like this. I want that bedroom like that. I want you to tear off the thing. I want you to add a pool. You got to give a scope of work, right? And that scope of work gets adjusted based on your budget, right? I want you to do all this stuff, and you talk to your GC, and he's like, well, that's going to cost $1.06 million. And you say, that's fine. And then you get your budget. You develop your scope of work with your GC. He puts together the architectural plans, gets them stamped and ready to be submitted to county. And then county goes and they look it over and they say, okay, you're cool to build, right? We got to come out and look at this and this and this during the process to make sure that you're doing it right. And that's permitting, right? But it all comes back to the appraisal. It all comes back to this appraisal. Because the appraisal is what gives us the value of the structure. And so not more than 50% of that value, that's going to be our budget, right? That's going to end up being the budget. So the budget is dependent on the appraisal now because this weird A thing we're doing. And so the budget is dependent on the appraisal. And then the budget goes into the scope of work. Hey, we can't do, if the budget comes back at $3 million and they say, hey, you got $1.5 million, cool. We had a plan for $1.08 million, green light. Right? But if the budget comes back at $600,000 and they say, hey, the most you could spend on this asset is $300,000 before you go over 50% of the value of the structure, well, then I have to go with option A. Like, I'm not just going to let the property sit there. Then I have to go with Option A. I got to go to FEMA and sign up because I'm going to spend more than 50%. I can't even put this house back together for $300,000. It's huge, right? There's probably $200,000 worth of damage to just the ponds and the landscaping from Hurricane Helene. It's huge. And so, like, that's not going to happen. And so it all comes back to this appraisal, right? And so I start calling appraisers, which I've honestly never done in my whole dang life. I've never called an appraiser. Every single time I've ever gotten a mortgage on a property, the bank has a random list since 2008 of appraisers, and it just randomly sorts, and it's like, this is your appraiser for this job. I've never called an appraiser. My realtor's called for an appraiser, or the bank has called for an appraiser. And so I call my realtor and I was like, do you know an appraiser I can call? And she's like, that's kind of weird. No one ever does their own appraisals unless they're like full-time investors. I was like, well, that's what's up. And so I called 6 appraisers and 2 called me back, 3 called me back. I had like 3 conversations about appraisals, and the truth is some of them were really, really busy. And I eventually got someone who was like, yes, I can do this. I can go out. I understand what you're saying. You need value of the property as you bought it. It's had damage with Helene. You're in the process of getting like a FEMA loan to repair that damage. I see what you're saying. That's unique. It's going to take 10 days. Okay, I'll be done in 10 days. You'll have an appraisal. You can go and do what you need to do. Okay, so I'm like, okay, that's cool. Pins and needles, 10 days. And so we say, okay, 10 days. I can live with that. I'm going to spend money for the next 10 days anyways. We're going to do some stuff for YouTube. We're going to build some other companies. We'll just wait for 10 days. 10 days into this appraisal process, he gives me a call and he says, hey, I'm not comfortable with this number that I'm putting on paid. I'm like, what do you mean you're not comfortable with this number? And he's like, I'm not comfortable with the number. I don't feel confident enough that I'm right, because it is a big, unique project and it's all torn up because of Helene. He's like, I need to do something I don't do very often, but I work with another appraiser and I want that appraiser to come out and do his own appraisal and do his own comps and tell me what he thinks so that we can compare our notes. And he's like, what you get out of that is when we stamp and sign this appraisal, you're gonna have 2 signatures on that. So 2 separate appraisers will agree on this price and will stamp and sign. So it should be a really bulletproof appraisal, right? But the bad part is it's gonna take some more time, and it's gonna take some more time. And so I'm like, well, you got to do what you got to do, man. I trust you to do it. Now, my question in the back of my head, and appraisers are very cagey about the number when they don't know what the number is. They're never going to ballpark it because that's not how appraisals work, right? They're looking at different things. They're looking at water rights and access and mineral rights and comparables, and they just look at it differently. My best friend's father's an appraiser, so I've been around this world. He's never going to be like, I bet it's probably worth $6 million. Never in a million years. Plus, the guy's very detail-oriented and So I just wait. It's 10 days into this appraisal process, and I'm just waiting still. I'm just waiting for this appraisal. In fact, it's Monday of this week. It's Wednesday right now, but Monday of this week, I was on the phone with the investor, and he's like, hey, when is that appraisal coming back? And I was like, I don't know. I don't know. There is not a soul on this planet who wants this appraisal more than me. There's not a soul on the planet who this matters more than me. I want to see this appraisal. I have been waiting. I have paid for this appraisal. This has been going on since freaking July, and I cannot do this project without this appraisal because everything relies on the appraisal. The appraisal determines the scope of work. The scope of work determines the plans. The plans are required for the permitting, and I can't do anything without the permitting. And so it's all coming down to this. And my fear with this whole, hey, I'm not comfortable with the number I'm going to write on this, is I have had an appraisal where the appraiser came in and basically said, I am a untethered God king, and my opinion is law. All right. The first house we ever bought, we had it under contract for $299,000. We had been doing research on this house for months. All right. We had been working to buy we had been looking at this same kind of area. Hey, I think we want to live here in Salt Lake for months. We had really done our research, and we're like, dude, that is a great price for that house. Now, it was weird. It was old and it needed work. That's what we buy. That's what we've always bought. But we go to buy this house and we're like, $299 is a good deal. And this appraiser comes in and is like, hey, I am an untethered, accountable to no one God king. I think it's worth $270,000. And we're like, there's no way. But I know that appraisers can have an opinion, and they are not coming off that opinion. He is an untethered, answerable to no one God king. I fear what's going to happen is this appraiser is going to look at this, and he's going to say, hey, you bought it for $1,060,000. That's what the market will bear. It's worth $1,060,000. but there's 5 structures on this property. Right? There's the grody kind of double wide thing with all the water damage that we tore down. There's the mill, there's the horse barn, and there's the main house, and then there's the dance hall, right? There's 5 structures on this property. So he's going to be like, well, you know, the main house is the majority of that. Let's say 60% of the value is the main house. So we're just going to say it's $600,000. And it's all torn up. It's not worth that much. Right? Like, it could come in super low. It could come in so low. And then we go down the FEMA pipeline of, you know, having to raise it and having to wait and having to just keep spending money. It's like, it could come in really low. And I'm worrying that, hey, I got to have another appraiser come in, is so that when he gives me an appraisal for $600,000, which I'm irate with, there's 2 signatures on the page and he's like, hey, it's what it is. Right? Or it could be the other way. It could be the other end of the equation. Right? He could be looking at this and be like, it's worth $40 million, but I don't want to put $40 million because you bought it for $1 million. And so I don't want to put $40 million on the page because the county's going to come back at me and be like, you've lost your dang mind. And I don't want to have that conversation with the county either. Like, it could be anywhere. I think in my heart that it was worth $1.5 million to $2 million when I bought it. And we bought it super well. And I think in my heart that we spent $1.06 million, that we will spend $1 million, $1.5 million getting it up to fighting weight. We will be $2.5 million in, and it will then be worth $3.5 to $5-6 million, somewhere in there, right? Like, I'm gonna take a strategic risk. I'm gonna spend $2.5 million, and it's gonna end up being worth $5 million. I'll double my money on $2.5 million. It'll take me a year, maybe 2, to get it all up and running. We'll rent it for between $800 a night on the low end in the low season, to the whole property, all the units once they're all done, like $7,000-8,000 a night. Corporate retreats, like it can be an amazing thing, but I can't do any of this unless I can get permits. I just can't. I just get to wait. And the way I've structured my business with this client, I let him choose. I pay a certain amount of interest no matter what. And then I get a lot of the upside if I can create upside. I let most of my clients choose. Like, this is how much risk I can take if I'm just paying interest. And this is how much upside I want if I'm taking all the risk. Like, you know, we just have a sliding scale. And it's just taking forever. It's just taking forever. And it just keeps backing up. And we're finally at a place where we can start knocking these dominoes down. But it all comes down to this appraisal. The appraisal determines the budget. The budget determines the scope of work. The scope of work determines the plans. The plans go to permits. And then we can start rebuilding. So he calls me Monday night. And he says, hey, 17 days into this appraisal process, he calls me Monday night and he says, hey, I've got a number that I'm comfortable with. And I've gone back and I've looked at all my comps. My other appraiser went out to the property. He knows what we're working on. He's actually done a property kind of like this before, a couple of them. He was very familiar with this. He did his own appraisal. He's came back with his numbers. Our numbers are really close. I'm circling around a number that I'm really comfortable with. And I was like, awesome. Please tell me what the number is. Like, just please tell me what the number is. Like, my heart is about to explode. This has been such a long process, and this has just been nothing but bad news for 7 straight months. This property, I'm honestly wondering if I've made a huge mistake, because Hurricane Helene just threw so many wrenches into the works. And I haven't even talked to you guys about, we had a property wash down a dang river in Hurricane Helene, like a $650,000 Airbnb just disappear off the map in Hurricane Helene. And so it has really, it was like a million curveballs at once. I'll put up a video when I have the emotional fortitude to go down to that property, which I have not. My team has gone down a couple times, but it was a body blow of entrepreneurship, because you just cannot. You can't plan for everything. And entrepreneurship is at its core taking strategic risks. It is at its core taking strategic risks and following your vision and letting your brain guide what you want to do with your life. This is entrepreneurship. anyone who's selling you a course and being like, you'll make millions and you won't have to do anything, bullshit. I call bullshit. I've started enough companies to know that this is entrepreneurship. And if this channel does nothing else, I hope to help young, ambitious people understand that there's a price to be paid to be your own boss, right? There's a price to be paid to be an entrepreneur. And for every one Elon Musk, there are 50,000 entrepreneurs that did not get their business off the ground for reasons. I'm not saying entrepreneurship isn't worth it, because I am an entrepreneur. I love it. I wake up every day pumped to do this awesome work that I get to do every day. And I get to be my own boss. And I get to sit in my own house. And I get to work from home. And I get to do some things that are amazing. And I love it. However, it drives me crazy that the landscape right now is just like, hey, start an AI YouTube, faceless YouTube algorithm company. Pay me $12,000 and you will be a millionaire too. Start an automated Amazon company and just give me $25,000 and you'll be a millionaire. It's preying on an entire generation who's having to take higher risks because the expense stacks are so high. It is preying on an entire generation, and this channel is at the very least to say, please realize that entrepreneurship is a strategic risk. I cannot say it clearly enough. It's a game of strategic risks. Back to Willow Creek. So I'm on the phone with this appraiser, and he's like, well, I've got a number. And I'm like, please, for the love of all that is holy, please just tell me the number. And he's like, well, so here's my comps. And so he starts down the comp hole. And he's like, here's my comps. He's like, there's this other comp out here. It's sold for 4.8 million, but it's 42 acres and it's a similar structure. And he starts going down the comp hole. Now, I'm going to be perfectly candid. I do not envy this appraiser, right? There's no way to do this. There's no way to comp this property. How many properties in the world have their own sliding rock? How many properties in the world? I'll wait. Maybe 5. There may be 5 properties in the world that have their own sliding rock. It's just a one-of-one feature. That's why I bought it. How many properties in the world have their own private ponds? Okay, that's a lot. There's properties with ponds. That happens. There's certainly properties that are near water, like lakefront, ocean front, but how many properties in my region, in the Greenville, South Carolina greater region? How many properties within 500 miles are even remotely close to this property? So I'm with him. I'm okay. I am with you. I understand the comps are complicated, and I do not envy you. He starts talking comps, and I'm like, okay, I do not know how you get to a value off comps without just throwing a freaking dart at a board. There's no way this is going to get to a value. And what I think you're going to do is you're just going to be like, well, you paid $1,060,000 for it. Let's say 60% of the value is that one house at $600,000. So I'm really, this could go horribly. This could just be a bad conversation. And so he finally says, so here's the way I'm approaching it. What it costs to build. I'm like, okay, I'm with you. That is an approach. Now, it doesn't account for the water feature, and it doesn't account for the ponds, and it doesn't account for the river, and it doesn't account for the pasture, and it doesn't account for like the accessory dwelling unit, really, and it doesn't account for a lot of stuff. But building cost, I get, right? We just spent $520,000 rehabbing a house that was 2,800 square feet. And that was low. Because since the last year and a half, I've just gotten bid after bid after bid that says new construction and big rehab construction is kind of like the $400 to $500 per square foot range. It's certainly more expensive here in the mountains. Like Asheville, North Carolina is having bids come back that are insane, like $600, $700 a square foot. Madness. Pacific Palisades in California, I've been reading articles that they are seeing their reconstruction costs, so the rehab cost of those houses, as high as $1,500 a square foot. I cannot imagine. All right. So I know, like, I tried to build a shed on my property here to move, into a little bigger filming area. And that's like just to build a shed, just to put it on like a concrete foundation and build a shed. That's like $250 a square foot. So I know I cannot build a property. The value of Willow Creek is enormous. It's a beautiful house. It's going to be spectacular. It's like a McMansion. Or a mansion. I don't know, but it is a beautiful home. It's got steel I-beams underpinning the whole thing because it was made with like leftovers from Ryan's Steakhouse because the vice president of Ryan's Steakhouse built it and he used like commercial grade wildness. It's a really nice build. The bones are good. And so I don't know. I can't build it for less than $400 a square foot. And it's 5,723 or something square feet. I'm going to call it 6,000 square feet. So I can't rebuild it for less than $2.4 million. I just can't do it. If I had to today tumble the house, just take it all to the ground and just rebuild it, it's $2.5 million. Like I cannot rebuild it for less than that. And so in my mind, the appraisal can't be less than $2.5 million because that's just the cost to rebuild the house. So when he starts talking rebuild cost, I'm like, okay, I get where you're going. And that is a much more encouraging number. I get where you're going. And we both understand rebuilding costs are what rebuilding costs are. And so he finally comes up to a number after I ask him like the 5th time. I'm like, just give me a ballpark, man. Just help me out. Just help me out with a ballpark. And it's the best news I've had all year. He says, I'm just going to give you a ballpark because I'm still doing my, what he calls additions or subtractions. Adjustments. I'm still doing my adjustments. And he says, it's going to come in between 3 million and 4.8. Maybe a little on the high side of that. Now, an appraisal doesn't matter because I know I can't turn around and sell that property tomorrow for $3 or $4 million. But what it does is it validates every thought that I've had inside of my head for the last year and a half while I've been building this project for this investor, right? It validates all of the work we've done. Like we looked at hundreds of properties to circle in on the ones we bought in this 1031 exchange. We looked at hundreds of properties. I have looked at comps on this asset until my eyes were just freaking bleeding. My wife and I have talked about nothing but these businesses. One of the main ones is this renovation at Willow Creek for a year and a half. All right? We did a 1031 exchange, which means the day he sells his property, I have to know every property he's going to buy within 45 days of that date. And so I had been looking for months. Hey, I'm going to sell my property. We're committing to this. Cool. I started looking at properties in the region, properties on the coast, properties that we could turn into Airbnbs, because his real goal was he wanted to take a step back. He wanted to retire. He wanted to let me manage the portfolio, and he wanted to increase his cash flow. Right? That was his goal. And so we had to find all the properties that he was going to buy, and they had to be under contract within 45 days. And so we had to do all of our looking, we had to do all of our vetting, we had to do all of our numbers. We had to run Airbnb comps, we had to run wedding venue comps, we had to look at what other things in the region we're selling for to find a good deal, right? And a lot of that work only happens inside of my head or my team's heads. So we think it's worth, when it's all said and done, $5 million or $4 million. We think we're going to be $2.5 million in, $4.5 million out. That's a good deal. That's money for everyone. Everyone gets paid. So a lot of that math has been our best work, our hard work that's taken a year and a half to do. And the appraisal says the same thing. The appraisal says, just so you know, the final number is $3.7 million. I got the form yesterday. The final number is $3.7 million. And so I was able to call my investor and say, hey, good news. You know that property we bought for $1.06 million? The appraisal just came back that we've been waiting for. It's $3.7 million. But beyond that, we're able to go to the county and give them an appraisal. It has 2 stamps on it, right? 2 signatures on it. 2 appraisers built this bad boy. Like, okay, 2 appraisers. So this is as official as we can get. It's $3.7 million, which means they're going to say, hey, 80% of that is the value of the main structure. It's like $2.6 million. And then your value's half of that. So like $1.3 million, $1.4 million is my budget, which is where we started. We started at $1,080,000. Right? We started at $1,080,000. And so we've gone through this whole process to get this thing done. And it matters. I can't sell it for that tomorrow. I know that. It's all torn up because of Hurricane Helene. But it matters because some other expert who looks at properties all day, every day, and looks at comps all day, every day, agreed with our hard work that we had bought a great deal at a great price. But beyond that, the SBA loan that we're working on, like, this property got hurt in Hurricane Helene. This project got hurt, right? Like, this project should have almost been done with construction already. Just the damage to the ponds is $150,000 of damage. The driveway needs to be repored because Hurricane Helene ate into the bank that's near the driveway, and we're going to have to repour the entire driveway. And it's 11.5 acres. That's probably another $80,000. The bids we're getting back for just exterior property are like $500,000. Now, I don't think it'll cost that much, but the property got hurt in Helene. And I am not freaking going to leave my friend who's a good investor and a good friend high and dry. I was like, hey, I will keep working for free until we get this thing across the finish line. And so we've been really working. We've been talking to the SBA FEMA loans, doing a lot of research, figuring out exactly how you repair something like this without just being like, hey, investor, it's time for you to cough up another $2 million because Helene screwed us. And so we've been working at this project, and the freaking appraisal really mattered because the day is going to come within the next 2 weeks where we finally get the SBA loan sorted, right? The FEMA SBA loan. And they're going to, at the end of the day, be like, okay, this loan is X number of dollars. What collateral do you have to support this loan? And I'm going to say, how about this $3.7 million appraisal that we just had 2 appraisers sign off on, right? You can go get your own, but here's the one we just barely did. They'll go get their own. But it gives us a bat and a ball to get the project on track the way we need, and it gives us a bat and a ball to do the renovation the way we need. Best news I've had all year. If this is interesting to you, if you're enjoying watching as I'm as honest as I can be, and as I try to express the risks of building companies and being an entrepreneur as cleanly as I can, then you'll love the channel. If this is interesting to you and you're enjoying the story, I'm loving telling the story. The next video you'll probably watch is one of our bedrock properties got shot 67 times in a drive-by shooting or something, like a ding-dong kaboom. And that's probably the next one you'll enjoy because it's a one-of-one situation. We've never had a house get shot up in a drive-by shooting before, but we did this time. And so we drove out and we recorded that video. Beyond that, there's some really good videos from Bedrock where we're like buying some amazing cash assets. I'm trying to get a pro forma together where like one of the recent purchases that we've made that we can actually walk you through kind of what a good deal in the market looks like. I'm trying to get one of those videos together. The Turo company's growing. Like the Turo company's really interesting. They've made a lot of really not awesome changes on that platform. And they kind of got me to the point where I was ready to just walk away and sell my cars and do something else. And now we're kind of in a holding pattern, but we're making really strong money on our Turo platform. 21 cars out in Charleston. It's fascinating. Like, it's really interesting stuff to me. Maybe I'm the one who finds it interesting. The Airbnbs are interesting. We just stayed in our Charleston Airbnb, and the whole time we were there doing our owner inspection, we just couldn't help but be like, this place needs a pool. This place needs a pool. And so we did all these comps, and we went out and got a pool bid and a hot tub bid, and we talked to the Brain Trust on Facebook, like all the groups, like, hey, is a pool worth it? And then we looked at all the comparable houses in the region that are Airbnbs, and it needs a pool. It would be a perfect Airbnb if it had a pool. And so, maybe we'll drop $170,000 to build a pool on that house. We just bought a bandage company. Maybe that's the video you should watch next. We just bought a bandage company. My older brother has this awesome bandage company that he just wanted out of for reasons. And I explained those reasons, and like, we bought a bandage company. It's the first inventory facing company I've ever ran, except for my Amazon retail arbitrage companies. So we're having a fun time. If you're enjoying the experience and if you're learning anything from this video, the thing you should learn is that if you do in South Carolina more than 50% of the value of the structure in a renovation, everything has to be brought up to code. And apparently there are plots of land that don't have a FEMA study done yet. And it was news to me that a FEMA study could cost more than $40,000 to $80,000 and take more than 4 to 8 months. That was news to me. That was new, guys. I am 42. I'm too young to have experienced everything. That was news to me, all right? We knew we had to bring it up to code. I never imagined there was no FEMA study on it. It happens. If you're enjoying the content, follow along. If you want to see the next video that's fun and interesting, we had a property get shot 67 times. I hope you enjoy. Go watch it. It's like nothing else you'll ever see.